Welcome back, folks, to another episode of the Insights podcast powered by FEX Global. I am Mark Montfort from Not Centralized and also the Australian DeFi Association, where we run awesome meetups and advocacy for the crypto space. So this week, we're jumping straight into the news. We've got some great guests out there as well. You hear from Shane from Fireblocks. I'll also do an educational deep dive with Arturo and talk about an interesting topic that's come up in crypto, but it's been around for a while in traditional finance space, which is dark pools. So check that out here. Over to the news, and we start off in the institutional finance and capital markets area. So first of all, Circle finally had their IPO. So it was announced last week that they were looking at an IPO with a valuation target of 6.7 billion. Well, guess what? They raised 1.05 billion in its US IPO, and they've got a valuation of 8 billion approximately. This represents one of the largest crypto-related listings since Coinbase's debut all those years ago, and it underscores the institutional interest in stablecoin infrastructure. So more on that in this article. Next, we see Bitcoin having $4.3 billion in inflow in just over 10 days recently. So Bitcoin ETFs have attracted over 4.3 in inflows over this period, with daily contributions ranging from $100 million to $900 million. The surge highlights an increased institutional demand and a perception of reduced volatility in these investment vehicles. So they're being seen as safe. Next, we see digital asset treasuries gain popularity amid the Bitcoin rally. So companies are increasingly adopting digital asset treasuries, DATs, allocating capital cryptocurrencies like Bitcoin to hedge against inflation. However, experts caution about the risks associated with leverage and market volatility in these strategies. Check out this article here from Axios. Next, we have family offices, and they're embracing crypto investments as well. A recent BNY Mellon report found that 39% of single-family offices are investing or exploring in crypto investments. This is with portfolio allocations averaging about 1.8%. And the shift is being driven by the asset class's performance and demand from younger clients. Now over to the crypto infrastructure and institutional expansion area. First of all, ex-Commerce Bank CEO joins a DeFi technology company. So Manfred Knoff has been appointed as a strategic advisor at DeFi Technologies. And that's the company that has as its chair and a subsidiary Velour, which issues digital asset exchange traded products, so ETPs, as we saw previously. His expertise from this space and coming into the crypto world is a massive signal and important, as many of more colleagues are going to be joining in the same space as well, especially as the technology matures. Coinbase partners with Webull to enhance their crypto infrastructure. Coinbase has partnered with Webull Pay to launch a crypto-as-a-service infrastructure. This is providing companies with services such as trading, custody, and staking. This collaboration aims to secure a reliable and interesting kind of crypto infrastructure in terms of features to Webull's 20 million subscribers. So for more on that, check out this article. Finally, we're over to the policy and regulation area. And first of all, the SEC has appointed Jamie Selway to lead trading and markets division over there. So he has an extensive experience in market infrastructure and investment technology and has been tapped to lead the SEC's trading and markets division. His appointment comes as the division faces staffing challenges and aims to regulate broker-dealers, exchanges, and other market infrastructure entities. This Reuters article explains it in more detail. And then finally, emerging markets consider crypto asset reserves as well. So emerging markets are increasingly recognizing that cryptocurrencies are critical components of future economic strategies. So rather than focusing solely on volatility, policymakers are also exploring the use of crypto as an asset reserve to enhance their economic positioning. And in a world that is going to be dominated by whether it is US tariffs, tariff wars, tit for tats kind of economic weapons being used against each other, having crypto as a backup and base is certainly going to be interesting for many. Anyway, that's it from the news. Now we'll get over to the interview with Shane from Fireblocks. And welcome back, folks. This is episode 3 of FEX Insights, and I've got a very special guest, a man, the myth, the legend, Shane Verner of Fireblocks. Shane, how's it going?
Hello, Marcus. I'm extremely well. How you going, mate?
I am very well now. Folks may or may not know that we do go way back to my early days getting into this space. You were one of our biggest supporters very early on, so I thank you for sticking around and doing the great things
Yeah,
you're doing
pleasure.
with Fireblocks. And I would go so far as to say you've been a big supporter of the community that we also run in terms of the Oz DeFi Association because you bought one of our hoodies.
I didn't pay for it, mate. I believe I bullied you into giving me one. I
That
sponsored one of the nights, so it's kind of like I might have
it
sponsored
counts.
a lot of them. Yeah, it's kind of bought,
Yeah.
but there was some bullying involved as well. I'm not ashamed to admit
There
that.
was bullying, there was coins, there was a
There
transfer of
was.
some sort, and an
There
agreement on a
was some
smart
tips.
contract.
Yeah.
Yeah. So, but it's great to still, be doing all the good things that we're doing in the space here. And we were just talking before the show that we had your great colleague and friend there, Nick, on another show called Red Belly Insights. So sharing the same kind of name here, and I'll just pull it up on the screen. You can see here, Nick was on the episode 6 version. And I'm not going to play it in detail as the sound anyway, but
Did
whilst this
your
does what yeah, I'll have to it'll take me some fun editing. But the cool thing is that we can ask the AI like, give me a high level summary of this podcast of did what was Nick talking about? And we're going to carry that on in this. So, we spoke about digital asset custody, tokenization, stable coins. There's a cool report that you guys have done. But yeah, for folks that are, wanting to see what's going on, you can see the YouTube as well as like the actual insights and ask questions and stuff, and we'll do that for this very show too. So Shane, you get your own special treatment of this on a cool looking website too, so look out for that.
Brilliant, mate. I look forward to it. We had an Australia team watch party after you finished that, and the highlight of it was, of course, Nick saying he's from Melbourne, comma Australia, and be from some other bloody Melbourne with that accent. So yeah,
He could have been from Florida. Someone might have been
sure.
confused.
Yeah.
Melbourne, Florida. I feel like airports like that, they have like a special desk just in case. I think in Canada there's a Sydney,
Sydney.
Canada,
Yeah.
and just in case someone's
You're
accidentally.
very kind to try and pull him out of it, mate, but there's no escaping it, I'm afraid.
No, that's well, that's all fine. But we're here for you, Shane. Enough about Nick. He's gone now. How did you get into this space? For folks that may not know you, can you please give us a bit of a
Um,
background?
Sure, mate. I've been here coming up to 4 years. I was lucky enough to be the first Fireblocks representative in Australia. I think it was October 2021. Yeah. So coming up to 4 years. I don't know what that is in crypto terms, mate. 40? I
That's
think I was
old.
5 when I
Yeah.
started here. Um, how I originally came across Fireblocks, though, I've got a pretty boring big tech background with companies like IBM and EMC and Cisco and those sorts of things. But I was the first in country person for a cloud native core banking startup called Thought Machine. You might have struck around the traps, and their go to market is trying to replace, legacy IBM mainframe sitting in the corner of a data center and paying hundreds of millions of dollars a year with a SaaS solution. So myself and Richard Smith, who you also know, kicked them off in Australia. And while we were talking to all of the banks, one of them said, we're going to be interested in this stablecoin thing or this crypto slash digital asset slash smart contract thing at some point in the future. And so we found our way to a very small business at the time in Singapore and a lady called Amy Zhang, who you know very well. And from there, it didn't take long for me to jump ship and join her. So yeah, 4 years later, she's still my boss.
You saw the light.
Yeah, I don't know if she regrets it or not, but
It's
we
too
all
late
are.
now.
We're still playing nice. It's too late now, mate.
Yeah, you're
Yeah.
you're you're
So,
part of the furniture.
but always been a bit of a crypto punter. I
Mm.
have torn up a whole bunch of cash on my fair share of shitcoins. I haven't gone into the meme coin space yet. I have a daughter that has though, and so she's torn up a whole bunch of cash and made Solana some money though. That's important. But I dollar cost average into the Bamboo app, mate, as many of us in the community do. Yeah, so it's a space I love and a community that I can't see myself ever leaving. I'll get kicked out or dragged out at some point, no doubt. But we've got a fabulous little community here.
Kicking, screaming, and with a lot of
Yeah.
passion, I am sure. Now, back to the whole kind of Fireblocks, and it has grown. We were very lucky, and you helped organize this a few years ago when Michael Sharlov,
Yeah.
the CEO of based overseas, New York at the time. I don't know where he is now, but like still there. It was great to have him on tour. We interviewed him in Sydney and in Melbourne. It was great to have him down, and Fireblocks itself, like. I think I saw reports there was a fireside, a presentation, $3 trillion in transaction size notional value, and across 3 million plus transactions just in 2024 alone. Pretty
Yeah.
amazing stuff there. What's that growth been like?
It's been nuts. Working for a hyperscale company is it's a lot of fun, but it's also been crazy. We only came into being in 2019. You mentioned Michael Sharlov, one of our three co-founders who are still in the business and running the show today. They were at Checkpoint, another big Israeli cybersecurity organization, back when the Lazarus Group, North Korean state-backed group, hacked three South Korean exchanges and stole 200 million US dollars worth of Bitcoin. And they were the guys that were called in to do the forensic analysis of that hack. And while they were doing that, they worked out a way to secure wallets on the blockchain. And here we are. Launched our own MPC cryptographic security algorithm, and yeah, $10 trillion in digital asset transactions and 300 million wallets across 125 blockchains and more than 2,000 institutional clients later. We're still going pretty strong.
That's not bad.
Good
That's
numbers,
not bad.
aren't they? They all sort of,
Yeah, they
math.
roll off the tongue.
They do a bit.
I can imagine at drinks and stuff. Oh yeah, I just work for this $1 trillion transaction site. Anyway, I have a
Anyway.
partner. I should go. I would say that what's really interesting is that when we spoke to our good friend Nick, that we spoke about digital custody,
Mm.
digital asset custody, and the importance of it. Now, the people watching this show, coming from more of your LinkedIn crowd rather than your crypto crowd. But even for the crypto neighbor, I think there's always something to learn. There was a lot of learnings there. So just to go through it again, digital assets need custody, and people miss out on that fact. And there's this whole Wild West. We're bringing mature infrastructure to the space. What can you tell us about, what it is for the people that may be new to this and just why it's important?
Yeah, well, digital assets need a wallet to be transferred from your wallet to my wallet. Yeah, that's what really the heart of digital asset transfer is. And while it's in place, it needs to be secure. And while it's in transfer, it needs to be secure. And that's really as complicated as it needs to be. It is different, but when you're transferring things across the blockchain, you need to be careful because it's entirely transparent and entirely public, and it's immutable. So if you want to send $1 million worth of Bitcoin to me, which of course I encourage, you've got to get that address right. And if you don't, you'll never see it again, and I won't have received it. So before, organizations like Fireblocks came into being, Fireblocks specifically, you would send test transactions of a couple of cents and then get on the phone and call me up and say, Shaney, did you get that test transaction? Though hopefully you wouldn't call me Shaney. I don't know why I said that. And if I did, then you'd go through and send the million. Now, Fireblocks has enabled you to just simply select, in this case, Shane Verner, and send Bitcoin, how much and how fast, because there's the secret of the blockchain. It can sometimes be expensive to send stuff across it, depending on which chain you use. And I'll get it. So Fireblocks exists entirely to make it easy for institutions to offer digital asset services, that secure wallet, that security at rest and in flight.
I think that's a
Is
really
that
great.
simple?
Yeah, no, that's a I like it because we're in the age of AI. You can anything out there, whether a video transcript or a blog, you can just say Eli 5, ELI 5, or explain it like I'm 5. And I
Yeah.
think you did more like a 10 or
Okay.
12-year-old, but
Let's try it.
for many people watching, that's probably the reading level, and society it is anyway. The news and, political announcements are definitely pushed out that way. But, the importance of it is not to be underestimated because without what you guys have created, I don't think we'd have as many instos coming in as we have, the BNP Paribas, the ANZs, the BNY Mellons, the big global kind of institutes, the ones we know here, but also overseas. And I think it just all plays as part of the infrastructure needs. We've seen capital markets and how that works, but then the infrastructure needs that we're building with blockchain. What can you tell us about that? The importance of like good infrastructure when it comes to this space.
It's not, yeah. Can you imagine? I mean, you mentioned ANZ. ANZ Bank, and this is public, and they don't mind me talking about them, I hope. Um, they came to me in November 2021 with the view of experimenting with a stable coin, which ended up being called the $8 DC. And in April 2022, we launched that stable coin to do a settlement with zero cap and the Smorgon Group, big family office. And that made sort of global financial headlines. They were the first major bank in the world to build their own stablecoin. Now, so we had that was April 2022. So we had the infrastructure there, right? But that's only one thing. First, you need to put the infrastructure, then you need to integrate it into a legacy bank stack. We've got well over 70 major international banks and almost 300 international payments companies leveraging Fireblocks infrastructure. But that's only a small part of it. We're only a small part of the stack. Then you have to get through security and third-party security assessments and fraud and compliance and regulatory compliance. And then it's got to integrate into the customer's UI when it goes into production and everything else. So the level of sophistication integrating into any sort of banking or payments organization tech stack is pretty extraordinary, not to be taken lightly. And of course, the big word there, Mark, is regulation. Um, you and I have been in the same room on heaven knows how many occasions talking to politicians and Department of Treasury representatives and regulators and the likes of ASIC and AUSTRAC and APRA, as they're all going on the journey about how best to treat digital assets. And for those of you that you mentioned, I'm not sure if it's a pejorative term or not, I guess not, the LinkedIn crowd, um, uh, digital assets encompasses sort of the big traditional, can I say traditional? The dominant cryptocurrency tokens in Bitcoin and Ethereum. It can also be referenced to, I mentioned meme coins and the Solana network, Dog with Hat and Doge and all those sorts of things. But there's also stable coins, and we've seen the extraordinary development of and rise of stable coins in the last couple of years, and that's really where the banks and the major payments organizations are coming in. But digital assets can also mean you've seen real estate tokenization opportunities come in, and the Australian Certified Carbon Unit tokens coming into play and getting more and more institutional traction as people see, cost out, revenue up plays going on there.
I think that there's a lot of the big word, and let's continue with that regulation there.
Yeah.
We would not be able to do what we're doing in this space without the pending looming rules and guardrails that are necessary for any kind of market to grow. Without that, it's kind of pointless to think that anything can be taken further. So, just on that note, what are your thoughts on where we're at in Australia when it comes to regulation? We've been involved in a lot of these talks, as you say, but where we're at right now.
Locally, let's just stay there. I'm part of the APAC team, so I saw the MAS announcement in Singapore last week, and I think it's fair to say we as an organisation and many of our clients are still getting our heads around what that's going to mean short term. But locally, Australia's Treasury Department, I'm going to say October last year, published high-level plans for the regulation of our sector, of the digital asset sector. And I think they're less concerned with the issuance of cryptocurrencies and more focused on the platforms that custody client assets. So you think of the exchanges, the custody providers, the brokers, the funds, and the stablecoin issuers. Yeah, so it's been a long time coming.
Mm-hmm.
You might recall that just before when did we have the election? The April election.
Mm-hmm.
Both Dutton and Albanese came out, and they both ended up on the front page of the Fin, saying, "Hey, we are leaning into crypto." It's fair to say that Peter Dutton was more ebullient, and called out Donald Trump's big step towards Bitcoin being part of the strategic as a reserve, and the SEC reshaping their posture towards crypto businesses. But the Prime Minister of today, Anthony Albanese, and some of his MPs have certainly suggested that they were going to lean towards it. It's still a bit early to see what the timeline is going to be, but I think the vast majority of the industry is hopeful that we'll get clarity this year. What do you reckon, mate? Are you bullish?
Always bullish, the eternal optimist, even in the face of looming disaster, which can be, it's like that dog meme where he's in a house and he's everything's on fire, but it's like everything's fine. I think that it's necessary, whatever we get, it needs to happen because it's like I liken it. There's a lot of metaphors, there's a lot of analogies in this space, but one that I really like is the whole Spotify versus the Pirate Bay and other kind of pirated download music streaming things. The Spotify movement is what got things mainstream in terms of what they provided there for music, streaming music, but there's still the Pirate Bay that is around. And just like DeFi and a whole lot of decentralized and non-regulated stuff started things, getting it to mainstream, we need protections and
Yeah.
mainstream people that don't care about the tech. We talk about transaction speeds, and I think it's important, but the users of the future are not even going to worry. Starbucks did a great one when they had their loyalty thing, and it wasn't even blockchain that they said in terms of advertising, but it was definitely run on blockchain. And I think the quicker that we can get to getting our infrastructure in to the workflows that are out there, and you put it eloquently before with there's nuance to the things that are in the real world kind of space, and that infrastructure kind of question I had is probably the first part. We'll do this in further interviews just as to what things Fireblocks has there with its features, but I think that there's a whole lot of understanding that even if we get all of the workflows right, it's nothing unless we've got the right kind of backing. So regulation, that's kind of my view. I think we're going to get something, just given that it was a political issue as well.
Yeah, I hope so. And at pace, because my customers, and whilst we have, coming up to 2,500 customers, institutional clients around the world, we have 130 here in Australia. That include major banks, and you and I work together and with the RBA and the DFCRC, and right through the exchanges and the funds and the tokenization plays and the stablecoin issuers and right across our stack. While they don't have regulatory clarity, we miss out as a country on jobs and growth, which is that hoary old political aphorism, we need to get everybody in a job and we need to be seen as globally competitive. Well, you could argue that currently we're not terribly. You and I are both friends with Steve Vallis, who runs, along with Rochelle Cox, Blockchain APAC. And he's very publicly and constantly frustrated with not the direction of change. I think he loves that. And I think we as an industry largely, I'm not going to pretend to speak for the whole of the industry, but largely we're looking for regulation. It's just the pace. I think we've had a lot of consulting and a lot of earnest meetings, but I'm not sure we're not like the dog where everything's on fire. Because, while we're not moving, Dubai is, Singapore is, Hong Kong is, and you could argue that they're our regional competitors.
Absolutely. And if we don't, competition and sorry, opportunity will go to that competition.
Of course.
It will go to like this is a fantastic industry backed by tech where it finds the most efficient kind of way of doing things and people and processes move there. We need to create that opportunity for ourselves. So
Yeah.
I think it's important. And you mentioned the RBA and digital finance CRC. Now, we've been involved in the past together on the previous CBDC pilot. We are
Oh,
yet to wait. We're awaiting Project Acacia, the wholesale tokenized asset version, which could be CBDC for some, might doesn't have to be, could be money market funds. They've been giving some updates. They've been giving some interesting things there in terms of that. But let's just take a step back. 2023, and also now, can you talk to us about like your experience with these sort of big sandbox tests? What's that been like for you?
yeah, it's been really encouraging. I love that the Reserve Bank and the DFCRC are having a meaningful um, program of exploration in the space. I'll get the numbers slightly wrong, but there were well over 100 submissions that they received from, you might have a better idea of the actual number. I know we ended up with 16 successful use cases that we took public. I know that Fireblocks supported 14 of the 16 use cases. And I think we all, as an industry and as an ecosystem, learn a great deal from them. Uh, it wasn't without its hiccups, and there was some cynicism in the market, I think, but I don't think it was well founded. And I'm thrilled that they've backed it up. I'm sounding like a LinkedIn post there. I'm thrilled to be joining. I'm really happy
This
that we backed up the.
this is not AI. This is not AI. This is real Shane, by the way. So folks, just make sure.
There's intonation in my voice, I hope.
Yeah.
Um, yeah, mate. I'm really enthused that we've got phase two going. I think the DFCRC are going to announce their 16 or 17 or 18 or however many it's going to be successful applicants. Publicly, I believe they've had more than 50 submissions. I think that was public. Um, yeah, fingers crossed that you and I get a run, Mark.
I believe that in 2023 there was, from memory, and I could be quoting it wrong. I'll do the old Elon. Look, I could be wrong, but I'm just going to say numbers anyway. And he was definitely wrong on some of that, but that's okay. Good old Doge. Crypto is everywhere, right? But I believe it was close to 150
Yeah.
applied, and so a tenth is what got through. So it wasn't easy. They didn't choose anything. And if you go back to the report, the full scaped report that was created on the back of that by DFCRC with the RBA, there was some really interesting kind of like groups out there from tokenizing, was it cattle or something, to doing stuff to do with off-chain, like sorry, offline
Yeah.
CBDC, just in case networks go down. So really
Yeah.
thinking about that. And superannuation, pension funds, as they like to call it overseas, where there's a few days between the funds hitting your super fund and coming out of your bank account, and
Yeah.
what could be done by speeding that up. So really
You
fascinating
recall
stuff.
that Commonwealth Bank had a biodiversity play,
Yep,
um, and they had a goods and service tax play for exactly the same reason that the super play went through. And these
efficiency.
are all real world efficiencies that put money in people's pockets quicker. Yeah. Now, not everybody profits from that, of course, but it
Of
would be good.
course.
It would be great. It would be great for the punter, for the small business owner. Anyway,
Yeah, let's people can judge whether or not they will see the savings from that. Who knows? But the ability to do it, I think, is definitely the most important thing because as Legos go, we now get to create new forms of financial products and opportunities. And speaking of, and the theme before this has been stablecoin. It's a big topic area. Like for example, the two top things that we see, stablecoins on the one side, real world asset tokenization on the other. We talk a lot about both. There's a whole lot of tokenization as part of our proposed projects that we'll see, whether that gets chosen or not. But just going back to stablecoins, you guys did a great report on the state of stablecoins here in 2025. I want to bring that up just on screen. But whilst that's happening, Shane, did you have some favorite parts from that report that you're going to see just in a sec here?
I guess obviously the fact that 15% of global stablecoin volume goes through the Fireblocks network, I'm pretty proud.
Oh, yeah.
That's my highlight. I think the findings are really interesting. If you had have asked me before the report came out, and this report surveyed, you probably have the numbers in front of me. It hasn't come up on screen yet. I think it was 300 payments companies and banks that we surveyed.
Yeah. Yep.
It was more to do with speed rather than cost. So speed of settlement, I think more than half or around half of the respondents cited real-time settlement as the number one reason to have a digital asset, a stablecoin play.
Yep. I see it right here.
Oh, you got it. Yeah.
Yeah.
Okay.
It's 48%. Say speed is the top benefit.
Yep.
Lower costs cited last. Really.
There you go. Yeah. So it's kind of surprising that speed is right at the very heart of it. You and I, you're a merchant as well. You live in the T+2, T+3 world.
Yep.
Years ago, I think it was 2023. Again, this is public. National Australia Bank and Fireblocks partnered to do the world's first multi-currency interbank cross-border settlement. I know that's a mouthful. So we created 7 different currencies of stablecoin. The one you could name them. AUD, US, Euro, Singapore, etc. And we did a cross-border multi-currency transfer settlement between Melbourne and Singapore.
Mm-hmm.
Instead of taking 2 days and costing whatever it cost, $20, it took 6 seconds and cost 6 cents, sort of thing. And so we proved that there's a huge cost outplay and a huge speed improvement. And I thought it would be the fillip for, great institutional, particular banking adoption. But of course, I didn't, and I should have considered, having been selling into banks for the best part of 25 years, just the extraordinary infrastructural lift required, as well as the regulatory lift required from those organizations we were talking before, APRA, ASIC, AUSTRAC.
Or the 3 and 4 letter acronym, and longer for AUSTRAC. But you mentioned regulation, and you're talking about it here now, but this is interesting that one of the findings was that 9 in 10 say that regulations and industry standards drive adoption. So it speaks to that very point.
Well, if you're an exec in a payments organization or a bank, there's 2 things you really don't want to do. You don't want to have uncomfortable conversations with regulators, and you don't want to end up on the front page of the Australian Financial Review, unless it's, hey, look at me, I've done something fabulous.
Exactly.
Yeah, they don't tend to get on the front page though.
No.
Yeah.
So if it bleeds, it leads, right?
Yeah.
But really interesting stuff, and I highly encourage, like we did with the Red Belly show, that people look at this report, because it is like one of the latest to come out. And I think it's great that you've done the survey. It's not just like anyone, but it is, as you said, and we showed here the 30 banks and payment providers. When I used to work in traditional finance capital markets, the interviews with asset managers and interviews with folks that are in the space were highly valuable commodities because it gave you a cross-border kind of sentiment as to where people's heads were at. This gives us this state of play as to where we're at. This is the one for 2025. Are you guys, is there a 2024 one to compare to, or is this the first one? Do you know?
This is our first one, mate.
Brilliant. Well, I hope they do more, and there's
I
certainly some other
think it's
brain
got some
spots.
real traction
Mm,
with our target market, so we'll be doing it again, no doubt.
well done on piecing this together,
Thank
Dick.
you. It had absolutely nothing to do with it.
Take it, take all the credit. But look, I highly encourage a whole lot more people to look at this and to look at Fireblocks because whether they are, and you know, this was important in other conversations that we've had. Even if people are just getting started, I think it's important that they have the conversations because you guys are structured in a way that can grow as these businesses grow. So it's not that they have to wait until they're $1 billion organization or $1 million organization before they can start with you. Obviously, that'd be ideal, but you know, you guys are there to help grow the ecosystem.
Yeah, our model, you know, is nakedly stolen from AWS, who really sort of we're the first giant in SaaS. If you sort of think about it, you know, that consumption model where you can very easily start small, and you know, if AWS care about compute, storage, and network, we have a couple of similar metrics that we grow with. So, yeah, start small. We'll grow with you. We like to be the second call that organizations make that are coming into market. You know, first get the project approved or raise some money off mum and dad or the VC market, and then build your secure infrastructure stack so you don't lose anybody's money.
Or do like what we did and just eat into your own savings and investments, but that's fine if you back yourself.
All right. So you had some tense moments, no doubt.
Yeah, it's the roller coaster and it's been fun, but we're still here. I think the staying alive part only comes from going through these experiences and everything's a learning experience. If everything was rosy and this was easy, anybody could do it. And I hope that one day we'll be in a state that we can, but I'm glad that it wasn't that way because by having these kind of cataclysmic events, if we could call it, you know, throughout the years that have changed the shape of blockchain, it's always called for better systems in place. And we've always had the tech, we just haven't really been using blockchain for blockchain. And I think now that's starting to change, or it's already been changing for a while, so it's good.
Yeah, we could have done without the second half of 22 and the first half of
Yeah,
23. You know, but life's a choice between boredom and suffering, mate. We certainly chose suffering there.
it was it was a fun ride though. So as we continue, you know, in this Wild West kind of journey and putting up the homesteads, growing the new cities, exploring the new wilderness that you know, pioneers did when they created like the good old USA and other countries. Um, where do you see us heading, let's say crystal ball 12 months? What's the kind of outlook for you?
This bull run really hasn't taken off yet. Bitcoin's pumped today. What else? 10. Yeah. Um, and you know, it seems to have settled above 100, which is extraordinary. You know, it's only a couple of years ago that it was hovering around 20. So things are looking good. It hasn't been um the rising tide that's lifted all boats yet. The alts are still struggling. Um, some of the big institutional plays are yet to find traction. We've seen the rise of stablecoins. I guess what what I think is going to happen. I think the major TradFi organizations will be making a play for this space as more and more regulatory clarity comes in. And I'm just going to talk for Australia. Um, I think the likes of derivatives traders, CFD traders, traditional stock traders are going to come in and compete with the existing digital asset plays that we have today. And I think within the next year or 18 months, we'll have one of the big four coming into market with, or more than one of the big four coming into market with retail plays. I think all they need is a rule book that they can adhere to. real meaningful regulatory clarity. And then they're not going to pass up the opportunity for profit and satisfying the, what is it, 20% of Aussies that participate or want to participate in this market.
There's a lot. There's certainly
Oh,
a lot. Just a couple. Yeah, yeah, exactly. But it's a massive opportunity out there. And when people worry about being too late or the space
we're
goes
early, Mark. We're early.
very early and it's all looking up because when you're down as low as
That's
been,
big.
there's only one way to go. But Shane, thank you so much for your time. Where can people get in touch with you if they're keen to connect?
Fireblocks.com, mate. Shane Verner on LinkedIn. Always easy. Shane at fireblocks.com.
Not Shaney, not Shano, just Shane.
You can try all three, mate, but only Shane will work.
Perfect. Well, we'll bring you back on for a follow-up, but we'll
Sure.
dive deeper into the ecosystem and what you guys do. But for now, thanks for the intro. Thanks for your insights.
Cheers, Mark. Thank you, mate.
Cheers.
Cheers.
Thanks very much, folks. Welcome back to the educational kind of deep dives. I'm here with my colleague Arturo. Welcome back.
Thank you for having me.
I'm glad that we got this in your diary again. So the cool thing that we're going to talk to this week, it actually came up. It's something that I thought was going to be a topic, but it was interesting that CZ, the great person in the crypto space, regards whatever you think about him, but he raised a very topical and pertinent point, and it had to do with dark pools. Now, before we dive into it, a bit of history. Back in the 1980s, institutions were trading large blocks of shares on public markets, but there's a major problem with that crypto's seeing right now, that the moment that they started moving something with massive size, the market moved against them. And prices would crash mid-trade. The world knew that they were in because you have these markets where you can see buyers and sellers, etc. So to fix that, Wall Street invented dark pools. These are private venues where trades could be matched quietly and only reported once completed. So it wasn't about being shady. So just pause for a second.
Wall Street's never shady.
No, Wall Street's never shady, at least at the start. And then, oh my gosh, we crashed. Okay, cool. It was about actually protecting execution quality in an increasingly competitive and fast-moving kind of environment that they were in. If we fast forward to crypto today, we've built something that's radically transparent, and so it's facing this kind of issue. And the recent story that's really highlighted this was this trader named James Wynn was trading on Hyperliquid, lost $100 million. That's right. Like, he's got more than that, but he lost $100 million, claimed his positions were being hunted. Whether that's true or not, the fact that it can happen is a design issue in the DeFi markets. Arturo, let's talk about that. What are dark pools? What do you think about them? What do you think about this situation?
It's funny how things that happened in the 80s start to become like light bulb moments for people in crypto.
It's
I mean,
yeah,
we invented it, right?
Yeah.
We came up with this idea of trading. So what is a dark pool and why do we need it? So let's make a clear difference between an order, which is an intention to trade, and settlement.
Okay.
Right? And traditional markets and even many crypto markets, they have order books. So think of it this way: you have your little settlement mechanism here. So I have actually let's take something else.
Here, take my charger.
Charger. So we're gonna swap charger for coffee,
Mm-hmm.
right? And the swap, effectively the settlement mechanism, is that on chain, by the way, is that you have a little smart contract here in the middle. You deposit this one in there, you deposit that one in there, and this will only move there if this is in custody by that smart contract,
Yep.
right? So this happens. And what we're ensuring is that this doesn't happen or that doesn't happen, right? Now, this is only settlement, right? Before we even get to that point, you and I have negotiated, and so it's one coffee cup for one charger.
Yeah.
Right. So that's us intending to trade. We are agreeing that we are intending to settle, but we haven't settled, and then we settle. Right. So I submit an order, you submit an order,
Yeah.
that order gets matched,
Mhm.
right? And then we're good to go. So the dark pool concept effectively is, let's put it, the important part of the dark pool concept is it's at the order level, right? Because if I know that you have, you know, 1 million chargers and you really want coffee and I only have 10 coffee cups, right? And you need to offload that. You need to sell all of that. I see that you want to sell it, and I see that you want to sell it fast because you've literally told the market, here I have 1 million chargers. They're up for sale. Right. And that tells me that, well, okay, fine. Then you want this. It's going to be not 1 charger per coffee cup. It's going to be, you know, 100 chargers per coffee cup.
Exactly.
Right. Now, why do I up the price? I up the price because I know that you need to sell. Exactly. Because you're literally telling me, you're putting that up that market order, or that order for everyone to see. Right. That's the problem. Again, it's not a problem with the settlement. It's a problem with how we effectively engage in commerce,
because it can be seen.
Correct.
These are signals out there, especially the ones that are of size.
So then the dark pool is basically us doing this negotiation, but not in the open market, but it's off market. It's in another place.
Put something behind here where we can see it.
Exactly.
Others cannot.
Exactly. And when you and I agree that we're going to trade and we settle, then we match an actually settled or agreed upon order, right? So that it's only after the fact that they see how much has been sold versus how much you intend to sell. Right.
I think that's it's a very interesting concept that it maybe didn't make much of a difference being a very just only transparent, because it literally is only transparent kind of like market, until you hit a size problem like we saw here. And this really highlights it. Now, obviously, as we mentioned there at the start, dark pools led to so many other things in terms of potentially kind of shady stuff out there. But we've got like different mechanisms that we've got better tools. So maybe dark pools can be done in a better way. So there's lessons from traditional finance that crypto needs to see. This dark pools one is very much that again. So just going back to it, so after they were developed, I think it was called alternative trading systems, and it was like maybe about 2017 or so, 40% of US stocks were trading in that way. We've got to check the numbers there. So what do you think that TradFi learn from decades of managing these large trades? And we've been ignoring this in like crypto, but does this just speak to so many other things that crypto needs to look at? Like, it's not like, hey, we're discovering it for the first time, because the first person that sees a problem in the wild west, the first time someone sees a bear, and they're like, oh crap, what do I do? There's no reference book. But crypto has that reference book. So do you think this is a good thing?
So we're at the other side of the street from the ASX.
Yeah, literally just right there,
where you used to work. How many hundreds of millions of dollars do you think have been spent on fair market access?
Hundreds and hundreds, basically. Yeah.
And it sounds like a simple concept, but it's a really expensive concept, because you need to define fair, and you need to make sure that the infrastructures reflect those policies of what fairness effectively means, right? So there is a lot of invested money, not only in implementation, but also in understanding what orderly markets look like, that have happened in TradFi, have not happened in DeFi or in crypto, because crypto was an experiment that is now maturing, right? So the concept of are dark pools new to crypto? I mean, absolutely not. Binance is a dark pool.
Yeah,
right. OKX is a dark pool. Every centralized exchange is a dark pool from the point of view of another exchange, right? So you can have 2 exchanges that are trading a pair of, let's say, wrapped Bitcoin and wrapped ETH, right, on Ethereum. Now, if I am standing let's say that this is exchange 1, this is exchange 2, and this is the blockchain. If I'm at the blockchain level, I don't see necessarily what's happening in here, nor do I see what's happening in here. But there are hundreds of millions of dollars that are traded on that pair here, hundreds of millions here, and then they're settled on chain only when these two parties actually need to balance out their books and they finish netting off exposures. But they are dark pools from the point of view of the blockchain. So there's nothing new there. The only thing that going back to your question becomes important is that regulatory environments have actually made it so that these exchanges actually need to behave in specific ways, which is where you get the need for a markets license in many scenarios. And most of these exchanges don't have those. Only very few exchanges have those, right? But that regulatory requirement is what mitigates the risk for not understanding the best principles that are, let's call it the function, the output of hundreds of $1,000,000 invested into, and decades invested into understanding how should markets actually trade.
It's interesting that we've got all of this effort that's put into, as we said, the ASX is across the road here for folks watching online that maybe don't know about Australia. That's our major securities or stock exchange, as some may call it. What is interesting as well is that, people were like, well, transparency in crypto, is it a feature or a bug? We've had things like copy trading, MEV, maximum extractable value, kind of, or what they call front running in other kind of places happen. But when we look at the tools that crypto has, we've got things that we've played around with, and not played around, we built things on this. You've built things on this. We've got zero knowledge proofs that help with transparency. We've got multi-party computation that helps to centralize the different matching engines. We've got trusted execution environments as well. Given all of these things that we've got in crypto, and if we do go down this path of having dark pools, what do you think? How do you think about that? What excites you the most in terms of this kind of privacy tech, but for crypto trading?
What excites me is that we've had a lot of innovation in crypto that is now informing better workflows in TradFi. So even though we've had dark pools in TradFi for a long time, and I'll call them mature dark pools, because we've also had dark pools for a long time in crypto. I mean, most of the trades in crypto happen through dark pools if we see centralized exchanges as dark pools. But if we start to see that there is more focus on ensuring that these dark pools behave as they should, then we're probably going to have a lot of innovation over, let's call it blockchain DeFi-ish innovation into the concept of a dark pool that can actually be applied in the real world as well.
I think that's going to be really interesting when those kind of worlds do collide in good ways, because if we take the best of all those different worlds and we learn from the lessons that some have had more time than others, but as you said, crypto has had the dark pools as well. There's certainly things to think about in terms of like the challenges and trade-offs there. One thing to think about as well is, do you think that this is something that would be viable at scale in, just say on the crypto side of things, or is this just more of a niche solution just for the whales in crypto?
Yeah, look, if the reason why you have a dark pool is because you want to minimize the risk of your order affecting the price, right? So the definition of a whale is in relation to the overall traded volume of that thing that you're holding most of the time, right? So maybe you have a $10,000 order, but if you're trading $5,000 a day, then you're effectively 100% of the trading volume for 3 days at a time. Right? Now that's a problem. So if we go back to the question of dark pools and will they be accessible or necessary for everyday traders, it kind of depends on the asset that you're trading.
Yeah.
Right. So do you need a dark pool in Bitcoin? You probably need to have a lot of Bitcoin for that to be necessary. So would you care?
Sailor kind of like.
Would you care exactly? Would you care if you're a retail trader? No, it makes absolutely zero difference.
Yeah.
On the other hand, are you trading a shitcoin that has very low liquidity?
Yep.
Right. Then
and you're a signal. You're an actual signal.
Yeah, exactly. If you're sniping the token, then probably means that you're a big part of the daily volume. Then yeah, maybe you want to do something like a dark pool. But again, like it, yeah, I think that the dark pool concept is really just for bigger traders, and they were very important for the maturity and liquidity of the market, but it doesn't really affect retail directly.
Yeah, no, very fair point. And in terms of like the overall kind of takeaway from this is that there's a lot of these things that have already happened in the traditional finance space. The crypto is like, as you said, this is what happened in the 80s. It's come retro again, and people are learning, and we're seeing a lot more of this like pragmatic kind of like looking at things. I think there's a lesson here in terms of just looking under the hood and going deeper into these topics. Like there's a lot of sound bites. Hey, we need this. And, CZ said that, so let's do it. But no, we actually have to look at it pragmatically. For people that are trying to learn about this stuff, whether they're from TradFi, whether they're from like the crypto side of things, like how best do you think that they should go about that kind of like, learning and education to better understand either side? Because you'll know your side, but you don't really understand the other.
Yeah, look, do you educate yourself on pieces of information that are, let's say, 100 characters long?
Twitter.
Yeah. And most people actually don't even fill those 120 characters, which are the max, right?
Yep.
And probably the answer is no. But on the flip side, are you actually going to read legal documents that describe how derivative trades are executed? No, you're not. So strangely enough, I actually think that using AI to explain these concepts and you question and kind of iterate around these explanations is definitely not a foolproof way of doing it, but it probably is the best way of doing it, considering that the person that we're talking to right now is not going to be a derivatives lawyer or a derivatives trader, right? It's about just a bit of general knowledge that is still rich enough to be explanatory, but not detailed enough to be, I don't know, professional grade or whatever you want to call it, right?
Yeah, depends on the time that you've got. But there are tools out there. You can literally use ChatGPT and Claude and all these other models or tools to do that. And then there's certainly things that people get from watching this show, because if you are watching it on the FEX Insights page, you can ask questions about what's being described here and have AI help you take it further. But for more insights, deep dives, and all of that fun stuff, and booking Arturo's diary out on Fridays, you will see us here again next week. Cheers.
Thank you.